sales.
Good. So I'll have my sales here. Alright? So, am I finished? No. Something is increasing, something must either, there must be either a corresponding increase in something or an opposite. So I'll have my sales, or do I have sales already? So I have my sales here also increasing by quarter. So I'll have my cash here 4,000. See, it's one transaction, but we have entered 4 times. So when you sell your animals, it means that there are 4 things involved. The cost to you, then the revenue that you are also receiving, then your cash. So when you sell your produce, then you know which account you are going to what? Open. Any question?
I know you spoke to this before, and we spoke a little bit, but maybe you can explain again. How do I know what the cost of my pig is? How do I know what the cost of my grass cutter is? I only calculate the feed, I only calculate the vaccine, but how do I know? I know how much cash I receive for my pig, but how do I know what is the cost of that pig or cost of that chicken?
Yeah. Will somebody help us? I think will somebody help us? You know, we mentioned that if they are, those animals are what we call the biological assets, right? As we mentioned earlier. Now, if I bought the animal while they were young, right? It is not one giving birth to it. Then I know the cost of that animal. I know, right? The cost of that animal. So for the time being, I've said that we will later on do.
Am I going to depreciate this 300 over 3 years or spread the cost 300 over 3 years? Because I'm going to keep it for 3 years and it's going to reproduce for me. So at the end of the accounting year,
I need to depreciate it.
at which
300 Ghana cedis. So it's just this year, but the feeding cost, I think the feeding cost will be increasing from first year, second year, third year.
no, but the animal is also reproducing.
That's why I'm saying that the offspring, you will value
the offspring.
Yes. You will value it at the end of the accounting year. What is its cost? What is the price? How much will I buy it for? If I'm going to buy the 3 other offspring that these animals have reproduced, how much am I going to buy it? So your stock may no longer be 400 at the end of the accounting year, but it may be plus this one, which will be maybe 3,004. So that when you sell, you can match it against this. So there is always, when it comes to the biological or the agriculture, there is always revaluation of your asset. Now you talk of depreciation, whether you are going to depreciate the animals, right? When you revalue, if there has been a fall, then that margin will be the cost of the depreciation. Maybe you've sold some out. So it is no longer going to be your asset. The one, so when you value, when you value the 3 other young animals, you put it here. Your asset has also increased. Exactly. So when you are selling, it is going to matched. It's going to be matched agenda on the mention that we have two types of assets. We have the ones you are keeping, you are not going to sell now. That is the fixed asset. So if the mother, you are not going to sell the mother is a fixed asset. But the other ones you are going to sell. This year,
the other ones. It's the mother. It's the mother I'm keeping for 3 years.
it is your fixed
Fixed
asset.
asset. I'm keeping them for 3 years. So, because I'm keeping them for 3 years, her value today at 300 cities, should I spread it over 3 years? Or give it value 0 for this year, then finish? Then next year, 0.
This year, you will revalue in every accounting year. Last year, every accounting year. That's why I said that. That's why I said that the biological assets, they are valued at the fair value, which is the active market. You assume that there is an active market, there's a market for. And if I am buying these animals, how much am I going to pay? What is going to be its price? So it means that whilst my asset has increased, my capital has also increased. Right, my capital has also what? Increased. So the two sides is going to be for all. So I am returning 2 or 3. What will you do?
The value of the place and goods return out are not sold out and not return out.
Let's assume now, today it is a return out.
We need to know how many, the cost of that went to, so that we can use it.
Right, so now, how are we going to enter? Inventory will be what? Going down.
Yes.
Inventory will be what? Going down. So I will enter it. So what is my cash balance? So I have to then add up this one, add up this one, and the difference is my cash balance. The same applies to this, to all the transactions. At the end of the day, I must add up and then find the difference is what in accounting they will call it balance. So that is all. Then yeah. So after we've done that, we will list the balances that we will have here, all the balances. We will list them. If it is a debit, we will list it like a rule here. This is what is called the trial balance. So I will list the capital account here, debit here, credit here, balance here. You can have it like this, or like, so that if I know that it is increasing, I use the T so that we know which one is the left hand side, which one is the right hand side. Then if I move on to the columnar form, I know that no, this one is increased from the debit side, and therefore it will be here. Or increase from the credit side, and therefore it will be here. But if you don't also keep track of every transaction, you see that your trading and profit and loss account or your income statement will be showing incorrect figures, which will then affect the profit margin.
The lunch is ready.